Hello friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I will discuss another problem on basis of accounting. This is lecture number 3 and would like to request all the students who are watching this lecture, please go through the other two lectures on the basis of accounting so that you can have a proper understanding of the chapter on the basis of accounting. The difference in the cash basis of accounting and the accrual basis of accounting. Please record the question with solution in your notebook, and if you find any difficulty in understanding, feel free to communicate with me through email and the WhatsApp number given in the description box. From the following information, determine profit earned or loss incurred when cash basis of accounting and accrual basis of accounting are followed. So we have cash sales for rupees 5 lakh, credit sales for rupees 2 lakh, outstanding salary and wages 4,000, insurance paid in advance 2,500, outstanding electricity expenses rupees 1,000, income received 5,000. Now this income is excluding income received in advance. Income received in advance rupees 1,000, income earned but not received rupees 3,000, cash purchases rupees 2,75,000, credit purchases rupees 1,25,000, salary and wages paid rupees 44,000, electricity expenses paid 11,000, insurance expenses paid 10,000. Now this insurance expense paid is including prepaid expense. So let me first explain the question. So cash sales is a cash transaction, but the credit sales is a transaction the receipt of which is still outstanding. It means debtor account debit to sales. So cash sales, the journal is cash account debit to sales. Credit sales means debtor account debit to sales. Outstanding salary and wages. Now this outstanding salary and wages means this expense has not yet been paid. That is expense account debit. That is salary and wages account debit to salary and wages payable account. So this expense is related to the current financial year, but this amount is still outstanding at the end of the year. Insurance paid in advance means this is a cash transaction, that is prepaid insurance account debit to cash. Now this expense, that is insurance paid in advance, this insurance expense is relating to the next year and not to the current year. So obviously this amount will get reflected on cash basis, but it will not be reflected on accrual basis of accounting. Outstanding electricity expense, the journal entry will be electricity expense account debit to electricity expense payable account. And this is also not a cash transaction. This will get reflected in accrual basis and not on cash basis. Income received, that is cash account debit to income, and this amount will get reflected in both the basis of accounting, because your transaction journal entry is cash account debit to income. Now income received in advance, this income is basically uh, it's a liability because this income is related to the next financial year. So your journal entry is cash account debit to income received in advance. It will get reflected in cash basis of accounting, but not in accrual basis of accounting. Now, income earned but not received, your journal entry will be income receivable account debit to income. So this will get reflected on accrual basis because this is not a cash transaction, but this income is related to the current year. So cash purchase, so purchase account debit to cash. Credit purchase, purchase account debit to creditor. So please note the journal entry that I am discussing here. Regarding the salary and wages paid, salary and wages account debit to cash. This will get reflected in both the basis of accounting. Then you have the electricity expense paid. So electricity expense account debit to cash and insurance expense paid. Now this includes prepaid insurance. So you have a prepaid insurance of rupees 2,500. So this 10,000 that has been paid for insurance, this for the current year, this is 7,500 and 2,500 is prepaid. So this prepaid insurance is for next year and 7,500 is for current year. Now I have discussed all the general entries. Well, the insurance paid rupees 10,000. What is the general entry? Prepaid insurance account debit 2,500. Insurance expense account debit 7,500. To cash 10,000. So I have discussed all the general entries which is there in the question. Now I am going to solve. So here I am writing. So on in the same screen, I will write or rather solve the question for you so that you can have a proper understanding. So which are the items that will be reflected in cash basis and which items will get reflected in accrual basis. So I am writing here cash basis of accounting, and on the right side I'm writing accrual basis of accounting. So in my earlier lectures, I have shown you that on cash basis of accounting, you are supposed to write the cash inflow. So I am writing cash inflow. So what are the sources of cash? And here, just below it, I am writing cash outflow. So it do not consider whether that amount is for the current year or for the other years. But on accrual basis of accounting, here we write the income. Income means the income relating to current year. So I am writing for income for current year. It do not consider only the cash transaction. Rather, it focuses on the income for the current year. So I am writing here for your understanding income for current year, and just below it I am writing expense for current year. So your first item is cash sales. So the journal entry is cash account debit to sales. So it's a inflow of cash. So I am writing here cash sales rupees 5 lakh, and this will get reflected on accrual basis of accounting because this is the current year income. So I am writing rather here as sales amount for cash, and this amount is for 5 lakh. The next item is credit sales. So your journal entry is debtor account debit to sales. It's not a cash transaction, but this is related to the current year. So this will get reflected in your PL account, and I am writing here as sales that has been made on credit, and the amount is for rupees 2 lakh. The next transaction is outstanding salary and wages. So outstanding salary and wages, the journal entry is wages and salary and wages account debit to salary and wages payable. So this is the current year expense. So under expense or rather accrual basis of accounting, I will write the salary and wages outstanding. So here I am writing outstanding salary and wages. The amount is for rupees 4,000. The next is insurance paid in advance. So this is a prepaid insurance. So prepaid insurance account debit to cash. So I will write under cash outflow prepaid insurance. And the amount is for rupees 2,500. And this prepaid insurance is for the next year. So I will not record it in accrual basis of accounting. Next is outstanding electricity expense. Your general entries electricity expense account debit to electricity expense payable, and this is the current year expense. So outstanding electricity expense, and your outstanding electricity expense is for rupees 1,000. Next item is income received. So income received, your journal entries cash account debit to income, and it will get reflected in both the basis of accounting. So income received is for rupees 5,000. Next is income received in advance. So I will first record income received in accrual basis also 5,000. Next is your income received in advance. It's a cash transaction. So cash account debit to income received in advance, and this is basically a liability. So I will record it here, income received in advance, and the amount is for rupees 1 lakh. Next, the income earned but not received. So this is income receivable. So income receivable account debit to income. So it will get reflected in accrual basis of accounting. So income earned but not received, and the amount is for rupees 3,000. So these are all the income that will get reflected in cash basis and in accrual basis of accounting. So 7 lakh 8,000, I can write it here, and 5 lakh 6,000. Next transaction is cash purchase. So cash purchase, I will write in both the basis of cash purchase, and the cash purchase is for rupees 2,75,000. So cash purchase, I will write in accrual basis also for 2,75,000. Next is credit purchase. So your journal entry is purchase account debit to creditor. So I will write credit purchase, and the amount is for rupees 1,25,000. It will not get reflected in cash basis. So after credit purchase, we have salary and wages paid. So salary and wages paid is a cash transaction, and the expense is for current year. So I will write in both the columns. So salary and wages paid, and the amount is for 44,000. So 44,000 I have recorded in both the column. Next we have electricity expense paid. So electricity expense account debit to cash, and it will get reflected in both the column. Electricity expense paid, and the amount is for rupees 11,000. Next item is insurance expense paid, and this includes your prepaid insurance. So prepaid insurance I have already recorded in the cash outflow, and the insurance for the current year uh, will get reflected in both the column, and the amount is for rupees 7,500. So here I am writing insurance expense for current year is for 7,500. So total expense will be 3,40,000. And here I am writing insurance expense for current year is for rupees 7,500. So if you add up all these items, you will get 4,67,500. So your net income under cash basis will be rupees 1,66,000, and net income under accrual basis will rupees 2,40,500. So you can see the entire solution in one screen. Hope you have understood the solution, and I have already requested you to record the question with solution in your notebook, and if you find any difficulty in understanding, feel free to communicate with me through WhatsApp and the email given in the description box. Thank you and have a good day. Thanks for watching the lecture.